This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 262 is brought to us by ByBit. Speaking of gold, you can just do all of your gold trading on ByBit. So many people do. Lightning fast execution, low spreads, almost non-existent spreads sometimes. And you can also custody some or all of your gold on ByBit as well. Remember, as far as centralized exchanges go, if you choose to hold your assets there, ByBit did survive the largest hack in human history and was up and running the very next day. Oh, and you can get rewarded handsomely over and over again simply by clicking my link, which you can find in the ByBit blog, which you can find down below in the show notes. You scroll down to the bottom of the blog, click it, get signed up, and start trading. Active traders on ByBit get rewarded over and over again, along with your own personal customer service rep should anything ever go wrong, or you just need a customer service rep for anything. My listeners are the most well-treated traders on ByBit because with ByBit membership has its rewards. It is the 10-Minute Contrarian Podcast, and one of the things I really love doing on here is bringing news to you that I don't think hardly anybody caught or really paid attention to, but extremely significant news nonetheless. Because part of being a contrarian investor is the understanding that a lot of financial news that applies to us isn't always going to make its way to us. Even the people in our space miss a lot of the significant things that happen all over the world and deeply affect the investments that matter most to us. For example, the last time I really spoke on gold here on the show was actually a gold and silver episode, because Russia and China had both, at the time, decided to completely shut down exports of gold and silver both. And for some reason, almost nobody in the gold and silver world even really caught wind of this. But this is pretty monumental news, is it not? I mean, we've been talking about a revaluation for a long time now, and nothing says we're one step closer than something like that. Now, I was using past tense a little bit ago. I shouldn't have done that. No, it's still that way. That's not changing. Gold and silver is not allowed out of the country in Russia and China. But what just happened in China and the decision that they just made, to me, is every bit as significant as what I just mentioned. And for all you gold holders out there and future gold holders, you're going to really want to know what's happening. So I will do my best to bring this to you and break it down the best I can. So this past year, we have seen an over 27% drop in the price of gold from its peak to the low we saw last week. Now, my question to you is this. When we see a drop like this in something like gold, of all things, the number one defensive asset on planet Earth for the last 5,000 years. Was it because 27% of all the world's gold was sold off in that time? I mean, that's a lot. I mean, remember all the central banks that were buying. Some of them who were like in a pretty bad financial situation, like Turkey, had to sell it for oil. But that was only a few central banks who did that. And then all the gold that's held by all the wealthy people all over the world, all of a sudden they said, okay, screw this. We are going to dump our gold for fiat and tech stocks. No, that is not what happened. What happened is we have three very large bullion banks in the world. We have the COMEX in New York. We have the LBMA in London. And then we have the Shanghai Exchange, of course, in Shanghai. Now, what especially the COMEX and the LBMA love to do is exactly what they are not supposed to do. And they have both created this fractional reserve system for gold and silver, which, again, you cannot do because gold and silver you cannot print. I mean, you're not even really supposed to do it with fiat, but at the very least they can just print more fiat, and they often do. But again, you cannot print gold or silver. But COMEX and LBMA have just decided, screw it, we're going to do it anyway. So what this leads to is this huge manipulative system where you can short made up paper gold into oblivion, thus distorting its price to the downside. Unethical? Absolutely. Illegal? Yeah. Yet they just continue to do it anyway. So what ended up happening is you had a 27+% decline in under 6 months. It should not have been that big. It should have been far less. And the fact that it was this big in such a short amount of time really, really pissed off China. You have to understand the culture out there. It is a very gold-centric culture. The government tells its citizens to buy and hold gold as often as they can. Now, if you're wondering why they do that, I'm surprised you wonder why they do that. Okay, so 2 reasons. They, as much as they want you to use yuan, they understand just how trash fiat currency is overall, and they understand that true long-term generational wealth does not lie in fiat. It lies in gold. Remember, Westerners cannot wrap their head around this because we don't play the long game politically, with our money, nothing. But China does. They always have. And this is one of their strengths. And 2, if it's not obvious, they are going to revalue gold, and they will be the ones in charge. All of the signs are there. No more exporting. And the decision they made this past week has really, in my mind, solidified this. It's almost inevitable at this point. But they really got highly upset at this manipulated drop because you have to remember, too, if some of the major geopolitical figures out there, like Peter Zion, for example, this was kind of his main idea when it comes to China, but I've heard other people in the geospace echo this as well, is that the outside world doesn't really understand that internally, China is a bit of a mess. It's very fractured internally and very close to a major tipping point politically. Now, do I know if this is true? I have no idea. But what I do know is that when you tell your entire populace to hold gold, and then gold loses 27% of its value in less than 6 months, this is not a good look either. And if things are already a bit testy out there, and your populace is losing more and more faith in you because a bunch of goofballs out in the West decided to play casino with the gold price, it's like, yeah, I get it. I would be really pissed off too. So China understands that they don't necessarily have to take this lying down. They wield power now, as we've talked about in the past, very recently, actually. When it comes to things like gold, China is not just a dominant power, they are the dominant power now. The West dominates Bitcoin, the East dominates gold, and that is led by China. They also have the Shanghai Exchange. Again, one of the major 3 bullion banks in the world. So in response to what just happened this past year with the price of gold, China has decided that the Shanghai Exchange is now going to become the anti-COMEX and the anti-LBMA, in a sense that it's going to be the one place where the gold is actually going to be there. Crazy, right? They're going to be the one major bullion bank that does not sit there and manipulate the price of gold. The real price of gold is the real price of gold in Shanghai now. And to central banks and large institutions all over the world, this is going to be a very attractive option. The only reason it wasn't an option before is because you just really didn't have a choice. You had to decide, okay, which casino do you want to be a part of? Now, you can choose a far superior option in the Shanghai Gold Exchange. They're introducing something called T+1 delivery, which means if you decide to sell gold, you actually have to show up the next day with the gold you plan on selling. It can't be make-believe paper anymore. And, you get this, as of July 24th, you can no longer go short at the Shanghai Gold Exchange. They told all the traders there to wrap it up by July 24th. No more futures trading. The price of gold will now be the actual price of gold. No more manipulated nonsense. Now, will this stop all of the manipulated nonsense around the world? No, it will not. But when you do something like this and you become the superior option, you become the beginning of a brand new paradigm shift in the way gold is actually traded and valued. This forces the COMEX and the LBMA to get their act together. And this is one giant step closer to the revaluation of gold, which at this point, in my opinion, is only a matter of time. And that time is likely right around the corner. But this is really, really big and very bullish news for anyone who holds gold and gold miners around the world. And as we know, by proxy, this is also every bit as significant for silver investors and investors in the silver mining space. I mean, I trust China about as far as I can throw China, but if I had to have my gold in one of those 3 bullion banks and only one of those banks actually has the gold it says it has, well, then this is a very, very easy choice now, isn't it? Now, there's already so much gold and silver being drained from the COMEX and the LBMA. Expect more. And if these bullion banks get drained all the way to the bottom, we win. If these banks wake up and decide, hey, we have to change our ways because we're getting killed even worse than we normally get killed, we also win big. And this decision by China was the one major decision that is going to set all of this in motion. And I just feel like it was very important that you're aware of this, because I believe the historical significance here is going to be just that, incredibly, incredibly significant. Now, in the shorter term, you might have wondered why gold, silver, and Bitcoin did as well as they did yesterday. Forex traders, you should know this. NFP was really bad. The non-farm payrolls jobs report was extremely low. And this has all but completely taken the idea of a rate hike in July off the table. If the economy truly is slowing down, then people are spending less, and that is not inflationary. That is the opposite. Therefore, there's no need for higher rates. Now, I had said, if you read my last Substack blog, you can subscribe, by the way. The link is down below in the show notes. And with Substack, you'll get an email every time I post something new. And the good news there is it is not abusive, because I really only post something every 2 weeks or so. But I said, I'm a bit less confident than I was before that interest rates were going to keep going down. But my confidence level before was like in the 90% range. It's just less than that now. Now, I think all of this rate hike talk is just fugazi boogity-boo and has no chance of happening until after midterm elections. But they were keeping it on the table. They were keeping the idea floating out there just in case inflation did start to get out of control. Like, we still don't know the full after effects of the war in Iran, or even if that war is completely over yet. So you have to float the idea out there, at least. But when anybody says anything about interest rates, that the market's going to react. So react it did, and now it's reacting the other way. Everybody knows that the end game here with Trump is to get rates down any way possible. But as we also know, that these midterms coming up are everything, and the economy is going to center around it. And the only thing more harmful than the stock market dropping during this time would be inflation getting out of control. As we all know, that's the one thing that really sunk the Biden administration, because inflation affects everybody, even people who really didn't care about politics, because a lot of that stuff just doesn't affect them. Well, they were affected in 2022, and this current administration knows that. And as neutral as new Fed Chair Kevin Warsh likes to appear, we all know that Trump didn't put him there for no reason. He didn't put him there to become the next Jerome Powell and be at odds with the administration throughout his entire tenure. I'm not buying any of this. I said, unless we really, really need one, if they ever do raise rates, it's going to be after the midterms, and it would be just probably one. Because if you're really going to have any type of meaningful correction in the economy, you would do it after the midterms, let it play out through the year, and then start the road to recovery so people forget about it by the time election season comes around. So to tie this all together, lower interest rates are the goal, which makes the United States dollar less attractive. Also, even before the war, we all know, or I should say we all strongly suspect, that the U.S. is going to be printing money again. After the war, it's almost a done deal at this point, or at least I feel, which, if you didn't know, money printing is extremely bad for the United States dollar and extremely good for things like gold, silver, and Bitcoin, and stocks for that matter. Anything that's not cash. And I feel like we need to be reminded of this because we are in a rare time in our history, because times like this do happen, just not often, but we are in the middle of a time to where cash is actually a fairly attractive option compared to the alternatives out there. And I don't want people to get too married to that idea. So if you are somebody who is looking to add on to your gold and silver holdings, or somebody who is looking to get into the game for the very first time, I can't tell you what to do, not financial advice at all. I'm not licensed to give it. But I just wanted to let you know what just happened and what the likely outcome of these things is going to be, in the view of this one podcast host, who historically has been very long-term right about things like this. So with all the negative and poopy sentiment out there about things like gold, Bitcoin, and everything anti-dollar, just know what almost always happens when sentiment gets this extreme. Making moves at this point certainly does not make you crazy. It just makes you, still, early.